Good morning, everyone, and welcome to the European crossover webinar. And we just got our Eurozone data here on the market composite or final PMI 51 point. Well, we're at 51.8. We came in a little bit better at 52.8. The euro is just a bit higher. Data that's come out this morning has been Spanish industrial output. Services PMI for Spain, which came in a little bit better than what they were expecting, came at 52.2. They're expecting 51. French PMI came at 52.9, held steady. French data has been pretty good overall. And then German market services PMI 51.6, a little bit better for German data. Now, we do have at the bottom or the top of this next hour Eurozone retail sales, and they're looking for up 0.110%. And later on today, we do have a Mexican gross fixed investment at 7 a.m. Eastern. IV PMI, so we don't have anything at 8:30 Eastern, but we do have IV PMI at 10 a.m. Eastern today, and that'll be it. So no data coming out of the States of any real consequence. The euro's coming back. I mean, we actually held almost to the pip, this 38%. We've talked about that. Looked like the euro was kind of hold yesterday, but once we said in the chat room, if we got a 2-hour close below that 1118, that was actually our bias chart support for Monday. We kept it for yesterday. But if we got a close below that, it would open the door for a move lower, and you can see right here, this bar you see here. So the bar closes at what 1117. So just a pip under that 1118. But that 1118 was our bias chart support. So that really opened the door for us to move lower. We had some support coming in here at 1099, but once again, that close below 1118 really opened the door for them to challenge the lows. I didn't think it would all happen all at once, but certainly it did. And we came down here to take out the lows from last week. You can see here. But we're holding here, and really, like as a gentleman was asking yesterday, well, what's the take on the euro now? Like, well, it's still bullish. I mean, all we've done is come back to 38%. We did break out of this trend line here. Dollar made this run up to 98. And came back. We're once again, I mentioned in the analysis, we got to get above 97.89 on a weekly close in order to negate the bearish put. It doesn't turn it bullish, although certainly be very, very constructive. Got to give the dollar index its props. If we were to, let's go and move this here. It'd certainly be in a better case than last week. You know, all last week we would have done was just come back to challenge the 97.89. If we got above it, it doesn't make it bullish. Well, here you'll have tested down here and then come back, and certainly that put in a better bullish case scenario. It still wouldn't be straight up bullish. We would definitely negate the downside if we close the week above 97.89, but it would certainly put a bit of a bullish bent on it if we did close the week above 97.89. Oil has paired back again. We did go above here into these new highs, and we kind of slid right back again here with oil. I didn't have a good feel for this market. I think DK Trader asked about it. Was inquiring about it yesterday. What was my thoughts? And I thought, like I said, I thought it was just flopping like I think I said, flailing like a fish on a dock, just kind of up and down, because there wasn't that sense after failing the previous day, and then we came back and thought, okay, there's a chance that we could push higher, but it really wasn't going to mean anything after we failed yesterday. In, I wouldn't say extraordinary fashion, but we came off quite a bit, and we've been pushed lower. So anybody with long, if they did bite on this, thought, oh my goodness, I can't even believe that. And we came down here. So then the market comes all the way back. I'm thinking, okay, well, then it's kind of just herky jerky here. I'm thinking, well, it's just flailing like a dead fish, like a fish on a dock. And now we're kind of resolving ourselves to lower, which shouldn't be too much a surprise in the sense that how we failed the previous day. So to me, I was looking at more of a composite to see how this thing plays out because it wasn't sure what it wanted to do. I mean, it could close up here, but it would try and start a brand new leg, but we'd have to get an all new, brand new buying because a lot of people that would have bought, although we talked about Monday, the volume wasn't that great, would have been knocked out here thinking, oh God, I bought it and it looked like it was going to take off and now it just came around. And the way we closed on Monday, remember we were selling off into the close of the pit and then we even pushed even lower. So I think it's just a bit of a mixed bag in here. Obviously, we saw a pretty good sell-off in gold. We talked about this on the daily roundup. After three opportunities at this 15-17, boy, did they come off. You see here, here, and here. And really pressed it good, but good, even when we came back into the apex. So really this market, if you think about it, almost in the same sense like crude, not the same thing, but in the sense of mortally wounded, because at this point, although we've come off the lows, certainly this market has really gotten taken to the cleaners pretty good. But you can see there was 3 times at this 15-17 area here, and then fell again, and boy, they really pressed it for all it's worth. Bunds still remain relatively weak. We're a little bit off those lows, and I'm surprised we're just not seeing that much support here for the euro based on where the bunds are. Although it hasn't pushed any lower. I mean, we came to 38%. We could have pressed lower, maybe come down into the 1050s, but so maybe the bunds are at least helping it from moving, lower. In the cross rates, Aussie yen continues to remain a bit stronger here. Obviously, the Aussie is stronger in and of its own right because you can see here against the euro odd here. And you can see it's versus the sterling odd. Still retaining that strength. Speaking of, let's look at the dollar yen. Wow, we pressed that pivot again. And they turned it back so far. Wow, what a dogfight here. Look at the dollar yen. We've had a real dogfight at this 927. And we'll get to that. Let's go on and take a look at the news. So the Australian and the New Zealand dollars eased on Wednesday as their U.S. counterpart got a lift from rising treasury yields, while the Kiwi took an extra knock from a mixed set of jobs data. The Aussie was holding at 68.92, having slipped off of 69.28 overnight. The repeated failure to break resistance around 69.30 now risk support at 68.77. The Kiwi faded to 67.34, away from a 3-month peak of 64.66. The pullback was mainly a function of a firmer U.S. dollar's optimism on Sino-U.S. trade talks, and a surprisingly strong survey of the U.S. service sector pushed up treasury yields. As a result, Australian 10-year bond yields are now 60 basis points below those on treasuries, yet the Aussie benefited from signs of progress on the trade talks, making gains on the euro, touching a 14-week high on a safe haven Japanese yen. The Aussie is often used as a proxy for China risk and has shown a close correlation with the yuan in recent weeks, falling and rising in lockstep. If this found support when China's central bank lifted its official guidance rate for the yuan to a near 3-month high on Wednesday, the latest news has added further fuel to the notion that a U.S.-China Phase 1 deal looks imminent, said Rodrigo Catril. If we get into a full rollback of existing tariffs as part of Phase 1 deal, then the positive impact on global growth outlook and pro-growth risk-sensitive currencies as the AUD and New Zealand dollar could be significant. For now, the Kiwi was restrained a little by data showing unemployment was a little higher than forecast. Still, the jobs number was not much as expected by the Reserve Bank of New Zealand, and wage growth did pick up to a decade high. That left investors split on whether the RBNZ will cut rates at its policy meeting on November 13th, with the market implying around a 65% probability. We still believe the path of least regret for the RBNZ is to deliver a 25 basis point cut next week, but we've lost a little conviction in the call as financial markets have improved markedly, said Kiwi Bank economist Jared Kurd. If they don't cut, wholesale rates will pop higher and the Kiwi will spike, possibly to 65 even, which honestly really isn't saying that much, but it has not been able to sustain a bounce. The dollar buoyed by trade deal hopes and strong U.S. economic data. The dollar held the upper hand against its rivals on Wednesday, particularly versus traditional safe haven currencies on rising hopes for a U.S.-China trade deal and a string of solid U.S. economic data. The dollar index against major currencies was little change at 97.93 in early Asian trade after rising 0.3 the previous day. Against the yen, the dollar traded 908. Down slightly on the day, but still not far from its October high of 928.5. Hopes that the Trump administration could roll back some of the tariffs it imposed on goods from China is part of a phase one deal. Boosted risk in financial markets. A survey at the vast U.S. service sector published on Tuesday showed that business sentiment had improved in October from a three-year low on September. The ISM non-manufacturing index rose to 54.7 from 52.6. The rebound is a welcome sign for the dollar bulls, as a fall in the index would have suggested that malaise in the trade war hit manufacturers was infecting the service sector too. The data came after strong U.S. employment report on Friday. On top of the scene of U.S. trade issues, the market is reacting to signs of U.S. economic strength at the moment, said Suzuki. The positive mood spilled over in the risk sense of Australian dollar, which changed hands at 68.94. And lastly, with gold. Gold inches up. We're not very bearish on gold prices as there are concerns over global economic growth. Economic data from the U.S. and European Union is not very strong. The protracted trade war between U.S. and China has roiled financial markets. Optimism that Washington and Beijing are going to work to narrow the differences enough to sign a phase one trade deal boosted risk sentiment. Trade talks are unpredictable, and the deal is not complete. And the paper, it is closed, so uncertainty to be going there. So this guy obviously must have been long gold. His whole take is it's not that bad. Well, look at the charts, guy. It was. With that, we're going to move into the charts. Okay, it says the euro broke down as disappointed longs exited after 2-hour close below 11.18, exposed the possibility for a downside test of last week's lows. Technically speaking, the pair retains its bullish bent as the pair has simply retraced to the 1065 to 38%. Support below is 1047 with resistance at 1113. A daily close below 1007 would negate the bullish bent. So support's going to be 1047. And resistance is 1113. As long as we're holding above that 38%, this still remains bullish. I mean, we're going to have to break lower. And we'd have to get it close below 1107. I mean, 1007 to say, okay, this is it. But so we're holding here. And actually, we could have woken in the morning, weaker, and we actually holding this area here. So let's move into the cable. Cable continues to hold a bid close to 29 even, no changes in technical levels. So this is something else. I mean, we are still, just when you think this thing might start to slip a little bit, it just holds its own. And look at the range. I mean, this range is exceptionally tight. And on a Monday, I mean, not on Monday, but on Tuesday, on Monday it looked like we were going to start to slide back, and we held our own right here on Tuesday, and the range is even tighter now. So no changes in levels here on the cable. Nothing. 29.26 on the upside. 27.63. We're actually giving a lot more room in case they break. No changes there. We'll move into the Aussie dollar. So it says the confluence in the 69.20s proved too much for the bulls so far, and this remains resistance and support held at the 60.80. So this is also still good here. So we're looking right here. They're just keeping this Aussie pretty much in check, but you can see here we've just not been able to take out the 69.11 on a closing basis. Right here. So they're struggling here. I mean, things are still bullish here. Now, like I said, you've seen the strength in the Aussie versus the yen, the Aussie versus the sterling, certainly the Aussie versus the euro. But we're not seeing this happen necessarily here in the U.S. So resistance is still going to remain the same there here. 69.44 here on this upside and 68.66 on the downside. So, and probably the same thing you're seeing here, but a weaker sense here with the Kiwi. The Kiwi retraced closing below the key level of 63.89, allowing for a possible test to 63.26. Resistance is now 64.53. So if we do still the door's open, even though we've broken below here the 63.89, we could still get this snap back here. So the only difference is that we have allowed with this close below 63.89 the potential to come down here to 63.26. So we're actually going to move this lower here after closing there. It'll just be here at 64.36. Now, the potential is after closing 63.89, we have the potential to come down here to 63.26, but support in the short run will be right there at 63.50. Let's go move into the CAD. The dollar CAD stayed within a tight range with an upside push. The pair needs a daily close above 31.82 to reassert a bullish stance. Potential remains for a slide to 30.93. So the resistance is still going to remain 30.82 on here, but in order for us to get going bullish again, we're going to need a daily close above 31.82. So right here, 31.82. Support remains 31.22. There's still the open possibility that we can pair back. Remember, at the end of the week, we do have a employment report. And when you think about how the dollar has rallied back over the last couple of days, and you're not seeing any of this really translate here in the dollar CAD. I mean, it's a little bit more of a positive push here, but certainly you would have thought we'd been much higher. So once again, it looks like it's being dragged with a ball and chain. And so once we hit the employment report, if it comes out pretty decent, we could find ourselves quickly at sub 131. We're going to the peso. The dollar peso is attempting to push higher after holding above the 1902 level. Resistance is 1923.6 and support remains 1908. Well, you can see right here. And once again, it's just oversold. That's all it is. There's nothing bullish about this thing whatsoever, other than it's just trying to. It's holding its own here. We didn't make it to 1902, and we're just holding our own. This is just some short covering potentially, and maybe we can squeeze a little bit higher. That's all. I mean, there's nothing bullish. I still couldn't figure out what people kept thinking that was bullish when we were down here, especially when we broke plus 1923.6. And look, 3 times we've tried up in here. I mean, the only thing you can point is that it hasn't given up. That's it. But you think about it. If you're short and you already written it down, you're like, okay, I think I've milked this cow for all it's worth. I guess I'm going to cover some of my shorts. That's what you're saying here, if you want to translate this technically. So we'll just leave it here at 1923.6. Well, if they goose some stops, we'll put it out here at 1928. If they can push a little bit higher, say 1928. But there's nothing all that favorable about that market. I mean, to me, if it rallied, you'd just be looking for, you'd be, to me, my take would be you're goosing the stops. So like if it was me and I was playing this for the long side, I would definitely get the hell out of Dodge by 1932. And I'd definitely take part of it at 1928. And that'd be if I was thinking, okay, they're going to hit the stops. Certainly nothing I'd be saying, wow, if we can get a close above here, we're going up to 19 whatever. Now, really on the risk-off business, maybe there's questions as to it's, how high can the SPOOs go because this should be going lower and it's not. So, but it isn't until it is. So I wouldn't give this thing the benefit of the doubt whatsoever. Support we have in 1908, we can actually move this now. Move it up to, oh yeah, it's still going to be the same, 1908, so no changes here. Let's go move into the dollar yen. This has been something else. When we got turned away from the pivot, the dollar yen continues to push higher on the cusp of the phase 1 U.S.-China deal signing. Key is the pivot 927, a daily close above what initially targeted a move to 1053. Only time will tell if the result is a buy the rumor, sell the fact. Support is going to be 960. So we're giving some I don't know why I say that. It's not 860. It meant to say 860. So it's going to be 860. And resistance remains a pivot. And the cash dollar index. The dollar index ramped up on Tuesday, challenging 98. Resistance is 98.11, followed by 98.43. The dollar index will need to close a week above 97.89 to relinquish the bearish outlook. A daily close above 98.65 would be needed to reassert the bull case. Support comes in at 97.48. So let's go with our support, 97.48. And on the upside, 98.11, if they're able to push above that. I'm still going to mark this as bearish until we can do just that. Let's go move into the cross rates. Well, it certainly looks like we're kind of running out of gas up in here. Two back-to-back gravestone dojis. Resistance is going to be right there at 69.78. Certainly looks like it's open to pair back. We'll actually give it some room on the downside, which is going to be 69.15. Well, certainly this is, after this gravestone doji here, saw here in the 2-hour chart, this market is certainly under some pressure. Boy, that was a nice little opportunity. I didn't even see this. I haven't done anything in the euro yen in a long time, but that was a very nice opportunity there. After we come back, you can see that's a nice little rally, and you finish on a gravestone doji, boy. And then just before resistance, it did take a little, well, it didn't take too long to sell off, but still not bad at all. Support's going to come in right there. Actually, we did get there, 2064. That'll be support here, 2064. Resistance is right there at the gravestone doji, 2116. Well, we came right into our bias chart support here. You can see that. We're going to move it just a hair lower. I almost put it here yesterday, and I gave it there, and look, obviously that held it. But I still think there's a little further strength here in the odds. So right there. Actually, we did make it down there. So it's going to be there, 60.46. And resistance comes in lower here, right there at 61.21. Euro Kiwi just continues to mark its time here. We have moved a little bit higher on the weakness in the euro, so I'm actually going to move it up to here for the support. 73.17, and the resistance right there, 74.29. Although I think that's dead money, that euro Kiwi. In the sense that it's really having a tough time really going. If you look on a 2-hour chart, it is moving here if you want to trade that way. But if you look on a daily, it just has not been able to seem to, after failing up here on the upside, came rallied back. We did test the downside. We're just kind of like dead money, dead in the water right now. Let's go move into the Aussie yen, where we have seen that strength come through. Go and take a look at here on the daily. Well, with this whole phase one deal, the potential is for this to really push higher. So you have to be careful with this market. The upside is still going to remain here at 75.60. Got 75.62. And the downside is going to be rather limited. And you got here 74.73. So no changes there. Looking at the guppy. Well, the bias chart held it right there. So I don't see any changes here in the guppy at all. None whatsoever. We had 40.73 and 39.70. We stayed locked up in pretty tight range, so hold up very well. And we'll finish up with the sterling nod. Well, it held the bias chart resistance here. And when the doors open, still for us to weaken here. So we're going to stay right here with the sterling nod. Same thing here. Bias chart resistance has held the market, 87.02. Basically, I think just to the pip. So here we are at 86.64. But I think the downside is open for this to move lower. And why we've kept it down here. So no changes here. We'll move into the other markets. Crude oil is rather interesting because, we on Monday we rallied up in here. We got above this 50%. Then we ended up. I mentioned that we had on the FX Daily Roundup, and I posted in the chat room too, that we had this Gravestone Doji, and that I thought that we were going to sell off going into the close, and that's what happened. But the key thing is that we had gotten above this 57.15. We also got up above a key daily level in the D's futures of 57.43. And we slid back below it. Well, 57.36 was the key level. We made it to 57.43. We slid back below it. We had the Gravestone Doji and opened the door for us to sell off, and we did. So it was really interesting to see this market turn around and come right back and even take out that high and then just sit there doing a whole bunch of nothing that's paired back. So to me, I think it's a mixed bag for now at the moment. I think it's a mixed bag. If we get the phase one deal, they may use this as an opportunity to just push it even higher, but it may ultimately end up failing. We shall see. But the U.S. economic data has still been pretty good, so it's keeping this market with a still bullish bent. But once again, after rallying back here, you had the opportunity to really take off. So we came back, and then we come back again to try again, and we're just trying to hang on in here. Yes, right now, the key level to look at right now has been this 92-ish area here, but we did get above it. So we'll see what happens. Gold, boy, it took one heck of a shellacking. I think a lot of people really knocked out of the box on this one. some people are looking for this market to pare back. That's reasonable to think that. It faked, the market got faked the last time. You can see here where they thought, okay, that's it. Now we're going to fall. And we came back here. This time, I don't think people are going to bite on that now. So I think it is susceptible to a downside. We're holding our own, but then again, we got whacked pretty good. So we may be holding our own before now we make a move, but a challenge lower. And if we do make that challenge lower, for stars, we'd be looking at 1472, and then down here to 1455. But we shall see. Gold's been a little bit tricky lately. The bunds continue to remain weak, so you think that'd be supportive for the euro, and maybe it has kept the euro from going to new lows. S&P still remain way up here in the stratosphere, although we've pared back a little bit, but I don't know if you can, knock it, considering it's still very, very strong here. But that's all we have for today. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room and the FX Daily Roundup.